Here's how to make money off Trump tariffs. Trump recently announced a multitude of tariffs affecting multiple countries worldwide, and in this video I'll be doing an in-depth analysis of exactly what countries and what industries are going to be affected by these tariffs, as well as give specific stocks to buy or short or buy options for later on in the video. It's important to note that this video is not financial advice and should not be viewed as such. It is for entertainment and educational purposes only. Okay, what are tariffs? Tariffs, put simply, are just fees that governments impose on importers for importing certain goods. The four types of tariffs that Trump plans on imposing are as follows: a 25% tariff on Canada and Mexico, starting March 4th, a 20% tariff on all goods entering the US from China, starting also on March 4th, a 25% tariff on all steel and aluminum goods entering the US, starting March 12th, and last but not least, reciprocal tariffs, which were announced on February 13th, but are expected to go into place on April 2nd. As the name suggests, reciprocal tariffs are just reciprocal. Whatever tariffs other countries have on US goods entering those countries will receive the same tariffs that the US will impose on goods coming from third countries into the US. Okay, it's important to note, however, what countries won't be affected by these tariffs, which include countries that the US has sanctions on, as well as countries that the US has free trade agreements with. Sanctions just mean that the US has barred its citizens from legally being able to do business with certain countries, organizations, or individuals. So obviously, if they're not doing any trade because they're legally unable to in the US, then these tariffs are not going to have any additional effect on this trade because it doesn't exist. And then, of course, free trade agreements. Free trade agreements just mean that two countries or more have agreed not to put tariffs on goods being exported and imported between them on most, if not all, goods going in between these countries. And with the US, it has 20 countries that it has free trade agreements with currently. And these 20 countries account for around 40% of all the goods imported into the US. So there's definitely a large proportion of the world that isn't going to be affected by these reciprocal tariffs. However, besides just looking at the countries, it's important to note that many countries are expected to get exemptions from Trump in terms of these tariffs, as he's announced already that he's considering exemptions with countries such as England and South Korea. So it's important to kind of look at the reasoning behind these tariffs, and kind of less of a reasoning, more of an excuse, is the trade deficit that many countries have with the US, or rather the trade deficits that the US has with many countries. So in 2023, the countries with the greatest trade surplus with the US, meaning the trade deficit that the US has with them is the greatest, are China, Mexico, Vietnam, Germany, Japan, Canada, Ireland, South Korea, Taiwan, and Italy. So that means these countries take less from the US in terms of the value of goods than they give to the US. And in terms of macroeconomic effects, it means that there is more money going out to these countries than money going in. And if this money that's going out is in US dollars, that has a negative effect in terms of inflation for the US dollar. Okay, so these countries have the greatest trade surpluses with the US. But of course, those are just countries. It's hard to speculate on specific countries. And of course, you could buy put options or put certain indexes, but that's not going to target the certain industries that you want to target. Just looking at specific countries on the free trade agreement list that the US has, certain industries are not going to be affected as much as other industries. For example, the sugar and coffee industries are probably not going to be affected that much by reciprocal tariffs because so many of the countries that produce goods or produce these goods and export them to the US already have free trade agreements with the US, so it's not going to be affected. However, besides just looking at countries, it's more important to look at industries, because once you look at industries, you can actually select certain companies to speculate on. And so by sector, for the imports in 2023, electronic products, transportation equipment, chemicals, energy-related products, minerals and metals, machinery, and agricultural products were the top factors or top proportions of the US's imports, meaning that these industries could be hurt the most if reciprocal tariffs go into place. So in terms of electronic products, while countries like China have already had tariffs imposed on them, besides these new tariffs, so just to give some context, the US already imposes quite a bit of tariffs on China, including a 50% tariff on semiconductors, as well as a 100% tariff on EVs. But all of these tariffs would also be on top of the 20% flat fee tariff that is supposed to go into place on March 4th. But for electronic products, the countries that would be greatest affected by these new reciprocal tariffs would be Taiwan and Vietnam, among others. because Vietnam has such great tariffs on the US, so goods entering Vietnam face quite a big tariff. Reciprocal tariffs would mean that goods entering the US from Vietnam would also be subject to such a great tariff, while other countries potentially have lower tariff rates for US goods. And of course, Taiwan, simply because it produces so many valuable electronic products for the US, including semiconductors, it's also going to be affected greatly by these tariffs. However, specifically with Taiwan, the semiconductors that is produced there under companies such as TSM, which is actually listed on US stock exchanges, they're probably not going to be affected as much as you might think, simply because there's already been so much talk about it. This has already been anticipated for so long, and TSM specifically has already started moving a lot of its operations to the US, so it's not really going to be affected by these tariffs as much. However, Vietnam specifically, I believe, is going to be affected quite a bit. And in terms of what industries in Vietnam are going to be affected, I think it's going to be the apparel and electronic equipment and broadcasting equipment industries. So in order to speculate on this, I would buy put options expiring probably mid-March, end of March, for the companies of Intel, Apple, Google, Gap Incorporated, and Nike. So Nike and Gap being the apparel and footwear industries, and of course Intel, Apple, and Google being the electronic industries. Because they have such a large presence in the country and rely so heavily on their production in the country, we can expect that once reciprocal tariffs are actually imposed on April 2nd, these companies which operate in the country are going to face heavy duties going back and exporting these goods back into the US. Okay, moving on to other industries. If you want to look at chemicals and pharmaceuticals, yeah, there's a lot of countries that have a lot of their exports to the US consist of pharmaceuticals, but the problem is a lot of the major pharmaceutical companies that operate in these countries also operate in other countries around the world. So it's hard to kind of find a specific pure play company that only operates in a country such as Ireland, which has pretty much most of its exports to the US being of pharmaceutical supplies and vaccines and anti-serums and whatnot. So it's just hard to pinpoint specific companies to try to speculate on. So for that reason, it's probably best to just leave that alone. Kind of the same thing with energy. Energy, because companies can get their oil and countries can get their oil or natural gas or whatnot from a multitude of sources, it's probably not going to affect the price of such products in a really major way. Again, with minerals and metals, kind of similarly, it's just that so many countries around the world can source these goods from other countries, as well as certain companies can sell their goods to other countries if they can't sell it to one country, to the point where it's hard to find a company that is pure play and that would be just completely devastated by these tariffs. And in terms of agricultural products, like I mentioned before, certain commodities aren't going to be affected as much as others. While you have products like avocados, which Mexico produces a lot of, the price of that in the US is probably going to skyrocket. But the problem is, once again, it's kind of hard to pinpoint certain companies with that. Looking into avocado growers, even just specifically, a lot of them operate both in Mexico and the US, but also in countries such as Guatemala and Honduras and other Latin American countries. So it's just hard to find a pure play company for that. As for other industries, in reality, while a lot of these other industries will be affected a lot, such as the auto industry, which even US brands produce a lot of their cars in Mexico. The problem is that there's a lot of negotiations going on with the EU potentially lowering its auto tariff rate, meaning that the US tariff rate would be the same, and so it would actually not have any real effect on the goods being exported from those countries into the US, as well as other industries. It's really just, it's hard to find pure play companies that are directly between that country and the US. But the problem is with a lot of these other industries, so of course the steel industry in the US, for example, like a lot of these industries have companies which their stocks have already responded to this. Not only has this news been anticipated for so long, but they've already responded to this, and it's unlikely that they're going to change their sentiment anymore in the days following this video being released. So besides the put options expiring mid-April or late April for Intel, Apple, Google, Nike, and Gap, I also plan on buying put options on a few other companies. And these companies specifically are Harley-Davidson motorcycles, and Brown-Forman. So Harley-Davidson Motorcycles, of course, produces motorcycles in the U.S., and Brown-Forman, of course, produces whiskey, bourbon, a lot of other spirits with American brands. And the reason why I would buy put options expiring mid-March or late March is because, well, the steel and aluminum tariffs go into place March 12th. And you could be asking, well, what does that have to do with alcohol or motorcycles? Well, the EU has announced that in retaliation to steel aluminum tariffs going into place on March 12th, that it would also try to impose tariffs, and this is kind of funny, but impose tariffs on goods that are produced in states that have supported Donald Trump. Here's what it boils down to. I'd buy put options for HOG and BFB, so Harley-Davidson Motorcycles and Brown-Forman, expiring mid-March or late March, and then close to the end of March or right before April 2nd, I'd buy put options expiring mid-April or late April for Intel, Apple, Google, Nike, and Gap, because the reciprocal tariffs are set to go into place around April 2nd. Of course, besides put options, you could also just short the stock right up to April 2nd, right before. Like and subscribe if you want to see more videos like this, and comment below, help the YouTube algorithm. And then also I do analysis reports on companies that are about to report earnings. So if you'd like to see that, you can subscribe and potentially see those videos as I upload them in the future.